Market structure. Market structure is another important lesson to understand. Market structure tells us that where the market is heading, either we are in an uptrend, downtrend, or market is just moving sideways. There are three type of market structures. One is uptrend, second downtrend, and the third one is sideways. Each market structure type has its own unique characteristics. We will explore how to verify if a market is in an uptrend, downtrend, or merely moving sideways. So let's just talk about uptrend. What happens in uptrend? Higher high and higher low. What is higher high and higher low? I will just explain in a bit. Just understand this. We represent higher high with HH and we use HL for higher low. An uptrend is verified when there is a series of higher highs and higher lows with at least two of each. Price will have pushed up past a previous high, creating a higher high. If the followed pullback creates a low that is higher than the previous low, higher low, we have verified uptrend. So let's just look at the example here. Let's say market was at $1. Market moved up to $2. We came down to 1.50. Then we went up to, we passed this high, which was 2, and we are at 2.50. Market pulled back and we are at 2.40 somewhere. So if we look here, when we moved up, we were at $1. Here, the price was $2. Here, the price was, when we pulled back from here, the price was at 1.50. So this is lower than this one, right? So this one is higher than the previous one. So we will call it higher low. This is higher than the previous low. So we will call it higher low. Here, the price was higher than the previous low. We will call it higher low. If we look to the upside, we create higher highs. How we call it higher high. This is the higher than the previous high. If we look here, this is higher than the previous high. Let's say if the price was here $2 and the price is here at $3 and we're creating higher high, we will call it higher high because if we look previously, when the last time we came up, this higher is lower than this one and this is higher than the previous one, so we call it higher high. When we see series of higher highs and higher lows in the market, we verify that the market is in upward direction and we are uptrending. Let's talk about downtrend. What is downtrend? We create lower highs, LH, and lower lows, LL. A downward is verified when there is a series of lower highs and lower lows with at least two of each. Price will have pushed down past a previous low, creating a lower low. If the followed push up creates a high that is lower than the previous high, lower high, we have verified downtrend. So let's assume the price was here, we move down here, there is a pullback, we create lower high. Why we creating lower high? Why we calling it lower high? Because this price is lower than the previous high. If we look here, this high is lower than the previous high. So we will create a series of lower highs and lower lows. Why it's lower low? This, if we look here, this low is lower than the previous low. Let's say the price was here $1. Now the price here is around 0.50. So this is lower than the previous low. So we will call it LL, which is lower low. Here, let's say the price here is around $4 and here the price is around $2. So this high is lower than the previous high. So when we see series of lower highs and lower lows in the market, we verify that this is downtrend and market is moving in downward direction. What is sideways? So in upward uptrend and in downtrend, we create higher highs and higher lows. But when we look at the sideways, market is not moving in upward direction or market is not moving in downward direction. So market just move sideways, creates equal highs and equal lows. A sideways market structure simply means that the lows and highs in the trend are virtually equal. Depending, of course, on what time frame you are using, this market structure means there is much uncertainty. What does it mean? Let's say we have a support here and we have a resistance here. Every time price comes down to $1, it goes back up to $2 and get rejected. Comes down to $1, goes back up to $2 and get rejected. Next time the price came down to $1, pushed back up. And what's actually happening here? So this high, which is $2, whenever we go up, we are not crossing $2. We are creating the same high and getting rejected there. So market just move sideways. And when we look at the support area, whenever the price comes down to support area at $1, we just push back up. So we are not breaking this area. So market moves in sideways direction. There is no higher high, higher low, or lower, lower, lower high. So we are just creating equal highs and equal lows here. When we spot series of equal highs and equal lows in the market, we verify that market is moving in sideways direction. Why market structure is important? Understanding market structure and simply identifying the pattern can help identify when the market may be in a trend or starting to change. In an uptrend, we have higher highs and higher lows. If price cannot create a higher high or higher low, it may be a sign that market may be changing direction. A trader may be looking to enter or exit the market at this point. Let's look at uptrend example. What's happening here? We are creating series of higher highs and higher lows, right? So when we see series of higher highs and higher lows, we verify that, okay, the market is in an upward direction. We are uptrending. Opposite to an uptrend, a downward has lower highs and lower lows. If price cannot create a lower high or lower low, a trader may be looking to enter or exit the market at this point, as the market may be changing direction. If you look at market, what happened in downtrend, market is creating lower highs and lower lows. So there are series of lower highs and lower lows at the moment. Let's say market is not creating lower highs and lower lows anymore, and we are creating higher high or higher low right after this. So this is a good indication that my market might be reversing here and we need to exit the market or we need to enter the market. If I am in short position and I see that market structure is changing, I would be happy to exit the market right there. And if I'm not into the trade, this is a good indication to understand the market was in downtrend. Now market is changing direction. So there is a good opportunity. There is a good option for us to look for the long positions in the market as we are changing trend. Here is the example of uptrend. Uptrend, what exactly happening? We are creating series of higher lows and higher highs. If we look here, we are creating higher highs, and here we are creating higher lows. Why this is higher low and why this is higher high? Let's just understand this thing. Let's say we have higher low here. The next time the price comes down here, the price was here at $1. The price comes down here, it's at $2. The price comes down here at $3. So this is higher than the previous low. This is high low. This is the higher than the previous low. It was here at $1. This is $2. And this is higher than the previous low, right? $1, $2, $3, right? If we look here, when we're creating higher high, how do we see this thing? This high is higher than the previous high. And here, this high is higher than the previous high. So when we create series of higher highs and we create series of higher lows, we need at least 2 to 3 touches. We need at least 2 to 3 higher highs and higher lows to verify it is in an uptrend. Let's say we see this higher high, higher, higher high, high low, higher high, higher low. There are so just 1 or 2 higher highs and higher lows. It's not verified that it is in an uptrend. So we need at least 2 or 3 higher lows and higher highs to combine them and say and verify that we are in an uptrend. Downtrend example, let's look here. The price creates lower highs and lower lows. So there is a series of lower highs and lower lows. The price here is $1. Let's say the price here is $5, $4, $3, $2. Let's say the price here is $4, here is $2, here is $1. So when we're creating lower high, what does it mean? The price came down, we created a lower low, went up, created lower high. Next time price came down, we created a lower low. Why it's lower low? Because it's lower than the previous low. Similarly, this is lower than the previous low. This is lower than the previous low. This is lower high. Why it's lower high? Because this lower high is lower than the previous high. This lower high is lower than the previous high. This lower high is lower than the previous high. So when we see series of lower highs and lower lows, we verify that we are in a downward direction, market is in downtrend, and we just look for the short opportunities in downtrend. And when we see uptrend, we just look for the long opportunities in the market.